The Bulls versus the Bears. Get in the game. www.tackletrading.com.
Hey everybody, this is Coach D with TackleTrading.com, and wanted to walk you through a little trade adjustment I just did to squeeze a little extra money out of a trade. So I'm going to walk you through it. I did actually went to record this before, and I forgot to hit the mute button on my mic, and so I recorded the 3-minute video, and I had to redo it. But after I got filled on the trade, so we're going to go retrofit it, and I'm going to walk you through what the trade was. So original trade was the naked put on AMD. And we've talked about this one in the clubhouse. After earnings, we see the market dropped here, right here. Earnings, it dropped, came down into support, got beat up. And that's a great opportunity, after bad earnings report to sell naked puts. So I sold some naked puts to promise to buy it at 9. And I duplicated the trade here in the virtual trading account. So you can see that. But after, it's kind of done what I expected it to do. It dropped, found support, and did a little rally here, something that I've heard referred to as a dead cat bounce. Not that that's real nice, but that's kind of the idea. So the gap, boom, and that's going to act as a support resistance zone. And there's another little whole support resistance zone out there at 12. And I actually think this is probably going to come back down. It could go higher. But I've got good little trade on this, and it's working well. We're getting relatively close to maximum gain, $75, $75 out of $115 total maximum. If you watch those numbers right there, and this particular leg was sold for 23 cents. Now what I did just now is I turned it into an Iron Condor to squeeze extra money out of it. And here's what we get out of it. The margin here was about $496, and so the ROI was 20 some odd percent. If we look at that here, whoops, let me grab that and show you the margin on that. So $115 maximum gain divided by the $490 margin requirement, and that's 23%. Okay, not too bad, pretty solid little trade. Decided to, and this would have reduced the margin a lot more significantly on a more expensive stock, but just bought a put for a penny, the $7 put, to turn it into a $2 spread. It really just cost, a penny plus commissions, so about $6 or so, $5-6. And then went and sold a bear call spread, 13 by 15 bear call spread out here, and was able to collect a little extra money out of that. So for the trade doesn't have to do anything. The stock doesn't have to go anywhere. It just has to stay below 13 and above 9, which has got huge probabilities of it doing that. In fact, let me go ahead and set the slices to break even at expiration so you can see the statistics. So I got 13 probability percent risk of a break even there, 7% down there. So we've got 79% probability of taking home the money. That's pretty solid. The benefits of what I'm doing here are now going to be as obvious as this. Watch the numbers. As I look at the maximum gain, I've managed to squeeze that up to 180 by bringing in, selling the 20 cents here, spending the 6 cents out there, left us with 14 cents times 5 contracts. So up to 180, and our margin requirement did pop up to about 670. So that's not too bad, but watch what we did to the percent return. So we got up, again, maximum gain 180. And divided by the 680, 670 margin here equals 26%. So we squeeze a few extra, percentage points out of that, and nice little, trade adjustment, just for a little bit of time and effort, squeeze a little extra money out of that. It increases the theta. If you look at, the time decay scenario on this, let me open up the price slices here. And let me add in a live price slice there at the middle. So what you're watching here is this. That's the middle price slice, this one right here at 11.25. And when I show you the time decay on this, you'll see how we kind of improve the rate of return on that. So let me take all the others out of the equation again, go back to the original naked put. And it would have had a nice little, $1.97, $1.98 theta. We put this on, that reduced it a little bit. There's only a penny in there, and then we sold the 13, bought the 15, and we cranked that up to 350. Not a real big deal, but over time that's going to come out and give us a slightly better return on the investment, and that's a clever little adjustment. I hope you guys like this video and are enjoying everything we do here in the clubhouse at TackleTrading.com.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.